Hey everybody, let's talk about swing trading and why we use it to beat the market. And a quick overview, here's the NASDAQ. This is on the QQQ. This is a strategy on TradingView that we have created. And you can see, for example, this is a 1,271% overall gain versus, and you can see the drawdown. The max drawdown is just a little less than 15%. That means that from peak to valley, there is no drawdown greater than 15%. And this green line is the back test of the strategy, and this blue line is the buy and hold. Now, we're going to get into this a little bit later, but I wanted to show you that right off the bat so you can see this is what our swing trade looks like on an overview on the NASDAQ 100. Now, so what is swing trading? Swing trades are held for a few days to weeks versus day trading. There's a day trader is someone who opens and closes trades on the same day. Sometimes there's hundreds of trades a day trader can do. Sometimes it's a few trades, per day. Now, swing trades typically use a 15-minute to 4-hour chart. A day trader typically uses a 1-minute to a 5-minute chart. Now, what does that mean? And I'm really referring to the candlestick charts because this is what we trade on, is the candlestick charts. From opening to close, each candlestick represents 15 minutes. In this case, this is a 15-minute. Here's another example of a swing trade on a 4-hour. While at least this is just the 4-hour chart, on the candlesticks each represent 4 hours of duration from open to close. And again, the greater the time frame, the fewer candlesticks there will be for a day, a month, and so on. Now here's an example on a 15-minute chart. This is our strategy overlaid. You can see that these are days down here. You can see that several days will pass. So here's an open, a close, an open, a close. And there's sometimes a couple days, sometimes a week. Look over here, we exited here and it took about 9 days for it to re-enter. So that's possible as well, but the average is usually 1 to 3 days. Now, if you like what we're doing here, be sure to subscribe and comment and like the button, hit the notification. What we do is we show our strategies to you, and so you can get as much information as you can from us, and we'd be happy to, we're thrilled to be able to show this to you and share it with you. Swing trading strategies can lead to profits in the short term, usually in the range of 10 to 30%. I wanted to kind of highlight that. But 90% of traders report losses during trading. A robust trader is more optimistic and claims that the success rate of swing trades is usually in the range of 10 to 40%. That means that only 10 to 40% of swing traders are successful. So if you have most swing traders, again, are probably discretionary traders. They're trading off of fundamentals. We trade off of technicals, but I'm just showing you what the average is according to the Forbes. The article is back in November of 2023. But look, it is interesting, 10 to 30% returns. I mean, why is swing trading even something that we have done? Or why would we want to do it? I mean, really, if we just take the middle, if 20% is our goal, and 20% really is our goal of here at the Brothers Automated Trading, and that's at 20%, okay? We want to see what is the difference between a 10% and 20% return. This is an example over 10 years. If you take $50,000 starting balance and a 10% return, 10 years versus the 20% return over 10 years, you would have a $135,000 ending balance with 10% return or a $363,000 balance with a 20% return. All right, that's 2.68% times. Okay, that's 2.68 times if you have a 20% return. Now, over 20 years, you see it goes up. For 20 years, it's 7.21 times. So over time, the compounding really, really adds up. So it's crazy, right? I mean, $50,000 with a 10% gain every year, $366,000 versus $2.6 million. And this is really the long-term gain, and 20% is so powerful. It's so great that it is possible to do. And I'm going to show you here why we prefer to swing trade and not day trade. Okay, so day traders can be extremely profitable. In fact, it's really the holy grail of trading. But 40% of traders only last 1 month day trading. And then they basically have systems that they'll be gusto about. They're really excited, and then they lose steam. They end up seeing losses, and they jump out. 20% of traders last 2 years, and only 7% are still day trading after 5 years. And then at the end, only 1% are actually profitable day trading. And those are the real pros who are day in, day out looking at the charts, and they're both technical but also discretionary fundamental traders. They're really few and far between. I tried to be a day trader many times, and I've spent hundreds and hundreds of hours mastering the education of day trading, but it could not fit into my lifestyle. I couldn't figure out how to do my day job and make it work, and swing trading came in to me, and I see the benefit in swing trading. But just to show you an example, this is an interesting graphic here. 13 out of 100 gamblers actually leave a casino a winner, where day traders, 1 out of 100 leave a winner. I'm not saying that gambling is a better thing to do, but it really does have better odds. And again, those who are the 1% who make it in day trading, kudos to you. The major lesson that we learned was that swing trading delivers us more consistent returns with lower drawdowns than the buy and hold or a day trading strategy. And let's just go over this. The market moves are more predictable and recurring over longer time frames. I was showing you a chart earlier over 24 years. We're not just looking at, we don't want to find a consistent strategy that's maybe good for 1 month, 2 months, 1 year, 2 years. Because if you're trading that strategy and it's only good for 2 years and then it just is no longer in rhythm and dumps, that's a problem. So here we go. The NASDAQ 100, this is actually on a QQQ ETF, back tested over 24 years. You have a 1,271% overall return, 14.68, basically less than 15% drawdown. This is the chart I showed you earlier. And this green line is the strategy over time. This is the buy and hold. So this is what we've developed. And again, this is a strategy that it can be applied to the S&P 500. It can be applied to stocks. But the NASDAQ is a really good example because it's a powerful ETF. So day trading, short time frames can have a greater looking back test for maybe 1 to 3 years. I was saying that, right? You can have a day trading strategy that you just really believe in, but they can the back testing is difficult to find consistency over many years. You have to adapt and constantly adapt your strategy on the day trading. But in swing trades, over many different market rhythms, you can back test and really get a good sense of whether that strategy is going to make it in the long run. So, for example, how did our back testing do during the COVID 2022 NASDAQ correction? How about COVID? How did it do during the 2008, the end of 2018 correction? How about the Great Recession in 2008, 2010? And how about the dot-com crash in 2000? All very different market conditions. You're looking for the swing trading really provides the ability to see if your strategy can go through all that time, all those different market rhythms, and be successful. And that's what it did. This is 24 years. This goes all the way back to the year 2000. The NASDAQ 100 drawdowns in the past 24 years is important to look at. Because again, if you look at here, it's 85% drawdown of the dot-com. The Great Recession was 54%. 2018 was 23%. Then the COVID was 30%. And then after 2022, the tech stocks went down 37%. We're trying to get rid of that. And so you can see, this is, for example, the S&P 500. And let me go back that. So this is the NASDAQ. This is the S&P 500. You can see how this is the strategy. It had 623% overall return with a 12% max drawdown. Well, here's the S&P 500 drawdowns in that same period of time. 50% in the dot-com, Great Recession, 56%, 20%, 35%, 26%. These are massive drawdowns. That's what we want to avoid. We do not want to be putting our money in a strategy or any kind of buy and hold situation where we're going to have these drawdowns. And if you want to know more about how we automate our swing trading strategies, be sure to look at the descriptions. We're going to go over all sorts of stuff on our channel. So be sure to look at our other videos and contact us if you have any information. Take care, everybody.